everyone, and welcome back to the Veterinary Business Podcast, where heart meets strategy and where we explore practical solutions to help veterinary practices thrive. I'm Che, your co-host. I'm thrilled to have you here today. So when you run a veterinary practice, your life is, it's a high-stakes balancing act, isn't it? On one side, you pour your heart into every patient, guide every client, and support every team member. It's definitely a labor of love. On the other side of the scale comes real financial pressures, overhead costs, hidden fees, and operational inefficiencies that quietly chip away your bottom line. That's really the tension we are diving into today. Our mission really is to try and give you a roadmap. How do you protect that margin? How do you get some financial control back without compromising care? That's the key. We're joining by Shannon, a senior consultant at Merchant Cost Consulting. Mark is a payment strategist and margin recovery expert who has spent nearly a decade helping businesses find money they didn't even realize they were losing. We're talking about actionable strategies here, ways to recover revenue, strengthen your practice's financial footing, and how practice owners can often cut their credit card processing fees by astonishing 30 to 60%. Hello, Mark. It's a pleasure to have you here, and welcome to the show.
Excellent. Thank you, Che. Appreciate you having me.
Before we dive in, I want to share something exciting. As a thank you for tuning in, Veterinary Business Institute is offering a complimentary practice growth strategy session with their marketing expert, Laila. She is a veteran in veterinary marketing with decades of experience. During this session, you will receive an in-depth analysis of your practice's online presence and a personalized 6-month plan to grow your practice, strengthen client relationships, and reclaim your valuable time. Mark, let's start with something that surprised a lot of practice owners. Many veterinary practices are unknowingly overpaying on their credit card processing fees, often for years. From your experience, what are some of those hidden costs that tend to sneak in without owners realizing it? How can they identify those red flags early?
Sure. I think the biggest myth in payment processing, and especially in veterinary practices, is that the rate really tells the full story. It really doesn't. The real money hides in the fine print. So veterinary practices usually assume that their percentage is all that matters, really. Like 2.5% is what, I would say average is, or really good pricing. But that's just the surface. So processors, because we come from this background, they actually bury the profits in dozens of small, confusing little fees that most clinics never really question, because it just comes in as a bill. It just looks like a bill. It's been paid already because it's been debited from the account. You'll see things like non-qualified surcharge, regulatory compliance fee, PCI admin fee, batch fee, monthly settlement fee, monthly statement fee. There's little words like convenience fee. There's, between you and me and anyone else, there's nothing convenient about a fee, right? Discount rates. There's no rate that's discounted. That's the rate it is, and that's what they charge. So none of these come from MasterCard or Visa. Their processor add-ons are designed to pad those margins, right? So the real world example is, just say a clinic's doing around like $100,000 in monthly credit card payments. And that, what it looks like is 2.5% might actually be 3.3%. Once all the extras hit, that's $800 lost each month. It's almost $10,000 a year with no added value. And those statements are intentionally complex. They're a different language. So you can't easily verify what's right, what's wrong, what should be what. The solution is just the transparency. So, have your merchant statements reviewed line by line, just to isolate those true interchange costs from the markup. I know it's like a different language, but there's a cost from the processing company that is a small markup. Like anything, there's wholesale, and everyone has to make money on wholesale, so they mark things up. That's where we really catch it. And once that's done, you can really reclaim thousands of dollars each year without touching your hardware, software, how you accept payments. Everything stays exactly the same. You just have to really pay attention to those fine line items.
Right. When I first heard that your clients have saved anywhere from 30 to 60% on merchant fees without even switching processes, I thought that cannot be right. That's a massive difference, right? So, can you walk us through how that's possible? What does that process actually look like for a veterinary practice that wants to achieve those kind of savings, but also keep operations running smoothly while doing it?
Sure. So we come from the background. We know processing. We know the credit card industry. It is, let's just say, it's meant to make you confused, right? It's not about switching providers. I mean, for anyone, that's the biggest hassle most of the time because these softwares are all integrated. So their management system, data management, customer management, to disrupt that would be more of a hassle than anything, just to save money. Obviously, saving money is a huge thing. So these companies come in and say, hey, we can give you a better rate. The grass isn't always greener on the other side. So one of the first things we tell clinics is don't switch anything, fix what you already have. If price is the issue, let's take care of it. Let's take it a fine tooth comb and really go through what's going on. So most clinics assume that the way to save is to rip and replace the processor. That's just risky and most of the time unnecessary. It's really about being an advocate for the business, working with that existing processor and that setup. Nothing changes operationally. What changes is behind the scenes. So we negotiate directly with the provider, identify inflated markups, remove any junk fees, verify month to month that the savings that we negotiated sticks. Like I said, we speak that language and we know where prices should be. And we always catch these companies with their hand in the cookie jar, so to speak. So because our work is all performance based, we only share the actual savings. If we don't find any savings, there's nothing we can charge. So we're all, like I said, performance based, and it makes the process really transparent and aligned. So you only win if we win, right? The most clinics that we do see are 30 to 60% in fees reduction with that first cycle. So all without any downtime or staff disruption. You don't even have to overhaul the system. Just make it honest, because we just have to hold these companies accountable, and they try to make all this payment jargon confusing so that you don't question it. So that's what we do and how we handle it.
All right. Thank you so much for sharing such insights to our audience. Mark, that leads me to something you often emphasizes, interchange optimization. Now, to most of us outside the payment world, that sounds like a serious banking jargon. But if that's where a big chunk of saving comes from, it's worth understanding, right? So, could you break it down in simple terms for our listeners? What exactly is interchange optimization? And what does it look like in action for a veterinary practice processing hundreds of transactions a week?
Sure. So the simplest way to put it is the consumer, the end user of the card, is a card holder, is issued from a bank. That bank has a true interchange rate, which is a wholesale price. Think of it like Nike makes a shoe. Obviously, they have a cost. These banks have a cost, so the card has a wholesale price. Where you process that payment and the transaction is actually run, that processing company has a small markup on that additional cost. So, for example, a Nike shoe has a reseller. They're not going to sell it at wholesale price because they'll make zero money. So what they do is they mark it up to make margin, right? So same way the banks work is they mark things up so that they can get their fee and their kickback. This is where we really catch them, when they mark up too much. Obviously, everyone's got to make money, but at the end of the day, they get very egregious. And they know that, okay, if we mark things up, the likelihood of the business questioning it is very unlikely because they don't know where prices truly are. And every time a consumer goes to the store and they use their card, they're rewarded for you getting cash back, points, rewards, miles. In reality, the person that's paying those miles and all those rewards is actually the business. So when Capital One, Chase, and all these companies say, hey, we're giving you a benefit, it's not truly coming from them. It's coming from the business that you use it at. So that's the unfortunate side of it. Every transaction that a clinic runs is assigned to a cost category by Visa and MasterCard, and most are landing in the wrong one. So interchange is the base set that is set by the card brands, Visa, MasterCard, Amex, Discover. Most of them are non-negotiable, but it's how transactions are actually categorized. So if your POS system on your credit card machine doesn't transmit certain fields, like the tax amount or invoice number or customer code, those transactions get downgraded into a higher, more expensive interchange bucket. I know this is a lot, but it's something that we've learned over the last decade of how to read these things. So interchange optimization really ensures that every transaction sends the correct data so that it does qualify for the lowest possible rate automatically. For example, if we find a clinic running $200,000 per month and 70% of those transactions are downgraded simply because one data field isn't being passed through, fixing that one item can save thousands each month without anyone at the front desk even noticing the change, right? So it's like tuning an engine. You're not replacing the system. You're just making it run at maximum efficiency.
Right. You did a great job, I think, simplifying that. Even I understood it.
Okay. Great. I love that.
Right. Okay. Amazing. I guess once you fix one major area like payments, as we spoke since the beginning, you start noticing similar leaks elsewhere as well, right? Because a healthy margin is not just about cutting card fees, it's about the whole operation. So after payments, where should a practice owner turn their attention next?
Sure. So we started in the credit card processing industry. We came from that and we noticed, okay, this is an opportunity because not a lot of people understand it. And then also people don't realize the actual cost that they're losing. So as we worked with more and more businesses, veterinary practices, we noticed, we were always questioned, hey, do you guys do expenses, expense reduction in other areas? And that made us dive into it a little bit more. And the more we looked, we found there is opportunity in all these expense columns. So credit card processing is just one piece. So the same overcharging happens basically everywhere in operations. So we audit everything when it comes to trash, waste, telecom, utilities, softwares. Some veterinary practices use specific equipment that they finance. So sometimes there's, discrepancies in there as well. When it comes to, the other areas, we go across multiple categories beyond payments, and the contracts that renew automatically with annual price increases, vendors really count on you not checking that. It looks like it's auto renewed or just, hey, you got the year done or whatever the contract term was. Hey, let's renew it. Here's a little markup. Did they notice it? Not every time. And at the end of the day, you're supposed to trust these people. And when we catch them, it really questions their ability to have a next vendor come in because, well, the first one didn't do as well. Now they're going to get painted with that brush of maybe everyone's doing that. And that's just every industry. Not saying everyone's bad. It's just those experiences ruin it for a lot of companies. So when it comes to telecom and internet, many clinics do pay for lines and services they no longer use, or they have bandwidth they don't need. Software subscriptions, right? Cloud-based tools quietly increase prices every few months. Most clinics don't notice that either. And the pattern that is always the same is really they just sell it and forget it. Vendors exploit these constraints and complexity because it takes a lot of time and effort to actually explore and dive into these things. So the cost review once a year, if you do that on your own, you can see that offset those creeping expenses. Even though it's incremental, everyone knows compounding. That just adds up. And at the end of the day, these people and businesses that you should trust are chipping away at your profits, and we're just really catching them. And it's just the nature of the industry. And what we see is that this could cover a lot of staff raises too, right? You want to take care of your employees. That money that's found could go back to them, or a new improvement, or a new location. Everyone is in business to grow and not kind of get chipped away at. So you never know, if these facility upgrades, people are always looking to expand. That's money that can be found within your own existing industry or business, or clinic, and just put it back into your business. Those profit leaks across multiple vendors, and plugging them in creates compound savings.
Well, you need to take some time to look at the big picture of your practice or business. Look at the whole operation. There must be pieces that you are overspending, like as Mark mentioned, utilities. It could be softwares that you're using. It could be equipment, a telecom, or internet. Just check where your business stands, whether you are using them already, or you are overspending on those stuff, right? It's not just about cutting card face, right? That really ties everything together, Mark. So, for the practice owners listening right now, maybe they're driving home, nodding along, thinking, yes, this is exactly what's happening in my practice. What's their next step? If they're ready to take control of their bottom line, what's a clear, actionable roadmap they can start following today to regain that financial control without losing focus on patient care, the important part?
Sure. I always say question everything, right? You can't do anything wrong by questioning it. So here's the simplest way that to find out if you're overpaying, and you can do it right now or when you are in front of your statements. So I would grab the last two merchant statements, divide the total fees by the card volume. So I'll say that again: the total fees divided by the card volume will get you your effective rate. This way, you'll know exactly kind of where you stand with the percentage to what you're paying in those cards. You're not going to get the detailed information from that, but at least you have an idea of where you stand. So if it's above 2.6%, you're most likely overpaying. The industry average optimized veterinary practices is usually between 2.1 and 2.4. So next, I would schedule an audit. A proper audit breaks your cost into 3 layers: interchange, processor markup, and any miscellaneous fees. And it shows what's negotiable. So once you know where that excess is, what we do is we actually help renegotiate and verify every month that the rates are locked in. Because say you do it on your own, in 2 to 3 months, those rates will pop up. It's in the fine print of every application that people sign on with merchant accounts. It says bank rates are subject to change. Bank rates change every single day, and we see it in every type of market. Cards, banks, the stock market, everything's changing, and it's all controlled by banks. So those rates are likely to change, and it's affecting merchants as well. It is in the fine print, but the most important thing isn't perfection. It's just visibility and clarity. And once you know where that money is leaking, then you can control that. And the first step to margin recovery isn't switching, it's just understanding.
Right. Thank you so much for sharing your wonderful experience and insights. Before we wrap up, if there is one key takeaway you'd want every veterinary practice owner listening today to remember when it comes to protecting their margins, what would that be?
Don't go on impulse when it comes to seeing an overcharge, because if you were to uproot your system, you know that what that entails. What that entails is I have to train my staff on new processes and processes. I have to take payments a certain way or record a certain way. Customers might be affected. First, take a look. Don't go on impulse. If there's a room for opportunity to save, do that. It comes down to 3 things. It's price, product, or customer service. If you're getting great service and the product's doing great, but the price is lacking, start with taking a look at where you can save. Or, that's something we do a free analysis on and make sure that best case scenario, we find opportunities and we help you save. Worst case scenario, you have great pricing. Hope everything goes well.
Right. Don't go on impulse. Question everything. Question everything. I love that. Every single dollar you reclaim today, whether it's through optimizing payments or tweaking internal operations, as Mark mentioned, it's explicitly framed as an investment in the future of your practice, right? So thank you so much, Mark, for sharing your expertise and showing us that running a veterinary practice is not just about treating patients. It's also about protecting your margin, uncovering hidden costs, and building a financially healthy foundation that supports your care, your team, and your clients. To our amazing listeners, thank you for tuning in. Your dedication to your practice's long-term success is what makes this profession extraordinary. If Mark's strategies resonated with you and you are ready to take actions in reclaiming margins or optimizing your practice's financial health, connect with him through Merchant Cost Consulting. His work is all about helping practices grow smarter. Mark, would you like to add something to that?
No, I appreciate your time and thank you for listening. Anyone that needs to reach out, merchantcostconsulting.com, and my email, mshannon@merchantcostconsulting.com as well.
Thank you so much. We would also love to hear from you as well. Which strategy from today's episode are you excited to implement first? Send us your questions or reflections. We may feature them in an upcoming episode. All right. Thank you so much once again. Take care, and we will see you in the next episode.